I am an investor, but why? Why am I investing? What is the reason? Got it now, but how much should I invest? For how long should I invest? See, we all have dreams that we wish to achieve in life, but merely dreaming will not help. In this video, we'll see why it's very evident that we should have a solid investment plan and how we can develop that. Okay, so stick around, like this video right away so that it reaches a lot of people and you can help them create an investment plan for themselves. Firstly, you should have a purpose, the reason why you're investing. It could be anything. It could be a goal to achieve something, to be safe, to have the safety, the security, to generate a regular income, to grow your portfolio, to grow your wealth. It could be anything. Decide what is it that is the most important thing for you. Is it growth, income? What is it? What is it that you want to have? Specify yourself. Is it something that you want a current recurring income from your portfolio? Is it something that you want to grow your portfolio now so that once you retire in your life, you can just sit and chill and relax and let that income generate a passive income for you so that you don't have to work to earn money? What is it? If you're in your early 20s, start preparing your investment journey. Choose this strategy, the investment style that suits you. Put money in various different asset classes, different asset classes where you get a taste of all the various investment opportunities that is there in front of you. You get to know which one is suitable for you. By the time you reach your 30s, you should have a wealth building plan, a defined working investment strategy that can help you grow your wealth, provide the income that you need, and also build your corpus for your retirement. By the time you reach your 40s, you should have a well-diversified asset allocation plan. When you're into your 50s, you should have you should be thinking about your retirement. You should have your retirement corpus planned and saved, safe somewhere. See, planning with a purpose in mind and at a correct age helps in taking a correct decision. It helps in putting up a strategy, a correct strategy for yourself. You get to identify the points at when you need the money and how much you need it, and at what stages of your life you need it. Now, to do all these things, a very evident question comes up in mind. How much is it that you need to set aside for investing? See, different investment plans have different minimum amounts that are required for its investment plan. Determine if that investment plan is suitable for you. Are you okay to invest in a lump sum, or is it the systematic investment plan that suits you more? See, there are a few key decisions that needs to be taken at this stage. Number one, are you comfortable working all by yourself, or you need an advisor? Number two, how much would you like to allocate yourself to stocks, bonds, mutual funds, or any other investment options? And number three, how would you like to diversify? Would you like to diversify a lot between different asset classes, between different securities, and try to be safe and get an average return out of all of these? Or you would like to invest in a very few handful selected picks and monitor them closely? Okay, now since you have decided this, the second stage in your investing journey, once you have decided how much, where to put, what should be the investment strategy, the next stage is, when will you need the money again? Now that you have invested, you now need to stick or fix the time frame till which you have to stick with it. Determining this time frame will allow you to stick with your investments and not make easy purchases in the next Diwali sale, or maybe the next car carnival, or whatever it is. You just cannot put out your money because you have set your goals. This is just like giving your money the time frame to stick to the wicket and play out all throughout the day, all the 50 overs in the match. But on the other hand, if you have a very short-term investment plan or very short-term goal, this would allow you to chalk out or put in a strategy for a short-term investment. It requires you to plan out a short-term investment plan, a different investment plan altogether. Now you have put in your investments, you have fixed your time frame, you have fixed your goals. Now think about the risk. How risky is it? How much risk are you taking on with this investment? Some investments are too risky. Investments like cryptos can go anywhere. No one knows where it's going to go. It's a high risk investment. Investments in real estates are somehow safe, but again, you don't know what's going to come up next. So there is a risk element involved in all the investment avenues that you can choose from. Investing in the stock market is also risky. You don't know where it's going to go. So you need to determine your risk appetite, the amount of risk which you can take to handle your investments, to put into your portfolio. See, a way to minimize or negate this risk is to diversify. That's the reason why people diversify their portfolio. They do this because it helps them to minimize the risk of one particular asset going down all the way and washing out all your capital. So it negates the risk of one particular security, going down and washing away all your capital. So the more you move towards a high return portfolio, a high return investment, the more risk it is. That's why cryptos, they give, there is an opportunity of a very, very high return, but at the same time, the risk is absolutely tremendous. Where is Bitcoin now? You know it. See, there is nothing as such, as we call a high return, low risk investment. No. If it's a low risk investment, it cannot give you a high return. It just cannot. So it's very evident, it becomes very, very crucial for you to manage your risk, to understand how much risk you're putting in on your portfolio, so you do not spoil your portfolio altogether. We believe it's better to earn moderate returns than to go out on a full swing, because if you miss the swing, you'll be thrown out of the game completely. Now that you have invested your money, you have chalked out your plan, you have finalized or you determined your risk appetite. Now what investments to choose from? Now many people, what they do is they straight away they go and buy the first investment plan that is given to them, the first investment opportunity that comes their way. Someone tells them this is good and they just throw their money into it. Lay out a list of choices in front of you and understand the benefits and the disadvantages of each of those investment opportunities. Narrow down your final investment choice from those that are presented to you in front of you. Maybe pick up one or two, or maybe the ones that makes you feel comfortable with. Allocate those investments, some of those investments for a long term and some for a short term perspective. Now let's put all of these together and see how it stands out to be. So you're early in your 20s, you have a time frame of 30, 35, 40 years. Your risk appetite is somewhere in between. Maybe you want to be 50% safe, 50%, you want to take some risk. Probably, if I were in this place, I would stick to something like the index fund, a mutual fund or an index fund. That's it. So once you have set a plan for your investments, like you would stick to the mutual fund investing or maybe the index investing. Stick to it for a longer period of time. Stay with it. Do not bother to check what's happening. Yeah, definitely monitor it, but do not unnecessarily sell it off and spend it on something else. Don't do that. Stick with it for a longer period of time. Of course, you do analyze your risk appetite and check your goals from time to time. See if your investments are performing well or not. If not, switch it to something else. There is a bouquet of mutual funds available to you. If one is not performing, switch to other. But stick to the investment pattern, the investment strategy that you have chosen. Stick to the mutual fund investing strategy and stick with it for a very long period of time till you achieve the goals for which you have set your investments for. So to sum up this video in short, decide what you need: safety, growth, or income. Decide first. Then once you've decided that, determine how much you need to invest to get what you wanted. Then once you have determined how much you need to invest, determine the time when you need it. By when you need it, when is your retirement, by when you need to achieve that goal. What is your risk appetite? How much you can handle, how much pressure you can handle. Find that out. And finally, the type of investment, the investment strategy, the investment world, the assets that you're putting your money in. Happy investing. That's all for today. See you again. Till then, SC signing off. Goodbye.